Hi, my name is Bruce, and welcome to our Quickies video dealing with the amendments to IAS 16 and IAS 38 on acceptable methods of depreciation and amortization. By way of background, the IASB received requests on how to determine the amortization of intangible assets that arise under service concessions. Remember, service concessions arise under IFRIC 12, which is the interpretation dealing with these. The IASB decided that this issue is more broad than just concession arrangements and thus amended both IAS 16 and IAS 38. Now, to start off with, I want you to think about the following example. Assume that Jolo Limited is a company that produces soft drinks using a specific machine. As a result of a global move towards healthy drinks, it's expected that the price of the soft drinks that they produce will need to be dropped in order to attract customers. So how would this impact your accounting for the machine? To start off with, IAS 16 has been amended to include the following. It says that any expected future reductions in the selling price of an item that was produced using an asset could indicate the expectation of technical or commercial obsolescence of that asset, which means you need to look at whether there are reduced future economic benefits and obviously potentially impairment of the asset. Now, looking at a second example, Momo Limited owns a machine that produces sweets. Momo produces these throughout the year, but stockpiles these in the quiet months to keep up with the demand during the holiday seasons when sales are high. So assume if the holidays were, say, in August and December, they produce sweets throughout the year, but obviously the big sales are in August and in December. Now, Momo's accounting policy states that the depreciation of the method that they use for the machine is based on sales generated by the sweets sold. Do you think this is appropriate? Now, you can see the commercial rationale behind this. It's a type of matching, where people are wanting to say, well, we'd rather match the sales with the cost, being the depreciation on the machine. And therefore, they've adopted a sales-type depreciation. Now, IAS 16 was amended effectively to say that we don't believe that this is appropriate. What they're really saying is if you look at the key definition of depreciation, it says that the depreciation method used should reflect the asset's future economic benefits that are expected to be consumed by the entity. What the IASB has said effectively is any depreciation method that is based on revenue generated by the activity that includes use of the machine is not appropriate. Why? Well, because if effectively revenue generated by this machine doesn't reflect the economic usage or consumption of this asset. Remember, revenue is generated by other things, such as marketing activities, sales prices, and a whole lot of different inputs as opposed to the machine. So effectively they're saying under IAS 16 you may no longer use a revenue-based depreciation. Now, turning to intangible assets under IAS 38, the amendments were similar. The first one, once again, was exactly the same, where they've said if there are any expected future reductions in the selling price of the item used while using that intangible asset, effectively this could once again indicate an expectation of technical or commercial obsolescence. So you would need to look at that and potentially whether future economic benefits embodied in the intangible are being reduced. The second amendment they made to IAS 38 was the same as on the first one, where they basically said that an amortization method based on revenue generated using that intangible would not be appropriate. And the reasons given were effectively the same. The only difference here, however, is for intangible assets, this is a rebuttable presumption. What they mean by that is if you can show one of the following factors, you can overcome that and you may use a revenue-based depreciation for the intangible. Now, the two circumstances they allow you to do that then are the following. Firstly, any circumstance in which the intangible asset is expressed as a measure of revenue, or where it can be demonstrated that revenue and the consumption of the economic benefits of the intangible asset are highly correlated. If you're looking for an example of this in essence is the situation we have with service concessions. And basically they're saying where service concessions are inextricably linked to the revenue that they generate, you may use a revenue-based depreciation for the intangible. Note the main difference here is they don't allow it at all under IAS 16, whereas under IAS 38 intangibles they don't really allow it, but they do give you this rebuttable presumption in certain circumstances. Now, this amendment is effective prospectively for periods beginning on or after the 1st of January 2016. Once again, you may early adopt it if you want, but you do need to make disclosure of that early adoption. Thanks for joining us and take care.